Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk about what can save this bull run. What are the things that we need to see? We're going to check out some charts, some news. We've got the all-important inflation data coming out at 8:30 a.m. Eastern Standard Time today. That is expected to be down. What does that mean for the markets? How am I trading this? We're going to get into that all in a moment. Just smash the like button. This does help this channel get out to more people and does help support the channel, as does your amazing comments. Thank you so much. And those of you who leave questions, I do get back to those as I'm able to. However, if you want immediate engagement and interaction with me and response, and you can find me in the Discords. Where can you find information for that? Right below in the description of this video, you might need to pop the more button and that will pop out to the description there. There's the Tribal Trades Discord that's closed at the moment, but you can get on the wait list for that. There is an email address there. And of course, the Stocks with Josh Discord. I have my own Crown Traders channel in there that is open at the moment. You can sign up and I share education, insights, resources, some of my trade setups, and of course, entertainment. Because this is not financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. Are you not entertained? Okay. And so let's take a look at what I feel are some of the things that we need to save this bull run. Number one is lower inflation. And I think we're going to get that this morning shortly. Rate cuts, which I think will come possibly this week, but the market is pricing in no, that the possibility is low, but it's still possible. But it's more likely to be May or June for the first rate cut for 2025. Quantitative easing, that the government has been selling off its balance sheet, but we want them adding to their balance sheet there. And of course, we need to see the tariff war end. And if there's any others, love to have your comments there, of course. So I wouldn't be necessarily betting the farm if that the inflation numbers are going to come in cooler. If they come in hot, then the market could sell off. And I wouldn't be betting the farm that is definitely going to be the case. There's no guarantees, of course, well, unless your farm is like this one here and you have a farm with a wonderful Bitcoin logo in the trees there. I don't know if that's by design or if somebody's photoshopped that in, but I thought that was pretty cool there. So don't bet the farm unless this is your farm. And that's probably a sign to go long on Bitcoin there, of course. And we do have trueflation, which tends to lead the CPI by 45 days. And trueflation is nosedived to 1.32%. And they do feel that trueflation is the more accurate measure of inflation rather than what the government does spit out. But of course, we have to go based off the government numbers there. And then, of course, you have here that inflation is down to 1.35% on trueflation indexes, the lowest in over 4 years. So if it doesn't come in low today, then the likelihood that it starts to come in lower in subsequent months are pretty high. So I do think that is the first thing from my list that we need to check off. And we're going to check these things off the list. We have seen lower inflation. I do think that's going to come in today, and that will be the first thing checked off the list. And then one of these other things, maybe the tariff wars might be the end of the tariff wars before we get a rate cut there, of course, as well. So we'll have to keep an eye on those events. So as you can see on the Bitcoin charts, we're on the weekly time frame. So right now we're sitting 83,000 right under the 200-day moving average. I would expect that if inflation data came in cool, we would get above this. We do have the Fibonacci there at 83,000 and the 200-day moving average at 83,500. And so some people might be front running this and getting in on some trades there. And remember, the altcoins are going to follow Bitcoin because Bitcoin dominance is up. Look at this. So it's controlling the altcoin market. If Bitcoin moves up, altcoins are going to move up. If Bitcoin moves up, altcoins are going to move up. And if Bitcoin moves down, altcoins are going to move down, basically. And sometimes when Bitcoin moves up, altcoins stay still, which can be frustrating sometimes. But I think we'll see overall bullishness for the market. So a break above that, I'd see the first resistance here at 85. 700. So that could be a nice little quick trade to there. I want to see what happens as price gets to here. We might find some temporary resistance there. But of course, if we were to continue on, you could stay in the trade, or you could close out and open up a new trade on the break of the 200 EMA on the daily. But what I'm really looking at is the 200 EMA to 20 EMA on the weekly. I'd like to see any kind of inflation numbers that come in cooler than expected. I'd like to see us rally up to at least this point and retest this $88,000 to $90,000 region. Of course, I think that if we do get up here, we will find some initial rejection there. We were in this range, the 90,000 to 100,000 range, for the best part of 3 entire months, maybe a bit longer. And so I think this could be tough. We've also got the 9 EMA coming up there right on that level. The 100 EMA on the daily is also up around this area here. We've got a double Fibonacci at 92,000. But I do think best case scenario is we rally up to that $90,000 area based off the inflation numbers. Now, if we get some kind of good tariff news, or there's some news about rate cuts, where even if the Fed comes out and say, hey, we're not getting a rate cut in March, but they are looking at the data and feel that if the inflation does continue to come down, they would cut in May or June, that would be good news for the market. They could say no to rate cuts, but they could be quite dovish in their tone and how they talk and how they communicate, especially because the markets have taken such a beating, the stock market as well as the crypto markets there. And so that's what we're looking for, is to come back and get back in this range and to get back above 90,000. So I think the best case scenario is right up to here, a retest and maybe initial rejection. Of course, we do have the PPI numbers coming out tomorrow, so maybe people want to see what that looks like. CPI is what we pay, and the PPI is what the companies and the manufacturers, distributors all pay there to purchase those goods before they sell them to us. Okay, so that would be the interesting data. Look, if the numbers come in poorly, then I think we can expect a pretty hard sell-off down to the 50 EMA on the weekly. We could come down to all the way down the 50-week moving average. Remember, the bear market historically has not been over unless there has been a full candle on the weekly time frame, open and close below the 50-week moving average, sitting at 75,000 at the moment, around about 75,000 there, okay? And I did say, and I gave warnings, many warnings, that if we lost this 90,000 area, what would happen, that we would come down and test the 200 EMA, the 200-day moving average, and then these levels down there. Because this is what happened in April of 2021. We had that capitulation event, and Bitcoin came down and even whipped below the 50-week moving average, even had a small candle close, maybe 2 candle closes on the weekly below it. But it wasn't until the full capitulation after November 2021 that we saw a full weekly candle open and close below that we knew that the bull market was officially over. So we could come down and test these areas between 70 to 75,000, $70 to $75,000 there would be the areas that I would look off at if inflation comes in hot, or if these inflation numbers, what it's been is whenever we've had something bullish, we've had a bit of a pump and then we go deeper than we were before. It's like, well, hold on a moment. We had a bit of a pump, and then when we dumped, we went lower than we had been before the bullish news came out. So that's been a little bit crazy. But let's look at the yellow brick road, because we're going to follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And as you can see here, we have from 84,000, lots of liquidity, to 87,000, up to the 89,000, 91,000 there. So a fair bit of liquidity to the upside. If we look on the monthly time frame there, you see all the way up to 100,000. We have millions of dollars up there. And of course, always the concern is the 6-month time frame, because that has that little level that we were talking about there. Now you can see the billions and billions of dollars between 71,200, 2 billion, all the way up to 74, 75,000, even 76,000. There's probably 20 or 30 billion worth in there. If I'm the market maker, and I'm not the market maker, if I'm the market maker, I'm coming down to get that. I'm coming down to get that before anything gets sent. And so, yeah, so that would be, but they could leave it behind And they could make everybody think, oh, it's so obvious to come down and get there, and then they don't come and get it, and then they come and get it later in the bear market, of course. And you see a lot of billions and billions of dollars also up around that $100,000 level. So don't forget about that. If you look here from about 95 onwards, there's possibly more money now to the upside. Look at all that 95 all the way up to 100,000. Somebody maybe want to get a calculator and add that all up. And then if you keep going up, 103,000, 104,000, 105,000, 106 and 7 billions and billions of dollars there, all the way up. Look, 109,000. So much money there to the upside there. So it'll be interesting to see. But if I'm the market maker, I come down and I flush out that 70 to 75,000 area, and then I send it all the way back up to 100,000. That's what I'm doing if I'm the market maker, but I'm not. So so there you go. So how would this look? We see all this liquidity to the downside. So we could have come down to the 50 EMA on the weekly. We could flush down to that $70 to $75,000 area there, as long as we don't have a full open and close, weekly close below that level. I want to know what you think. Do you think, number one, let's do option A, that the bottom is in? That the bottom is in here at whatever level we came down to here. For the low, maybe around was around 76,000. We touched the 50 EMA on the weekly, as we did on the April 2021 dump. Remember, on the April 2021 dump, we did come down and go below the 50-week moving average, and we even had a couple of candles close it. We had some wicks, but we didn't have a big open and close below it during that time frame. It did scare the pants off everybody, including me, and that was a dip that I bought with the most fear. I can tell you that was a tough dip to buy. However, as this one has been, by the way, as this one has been. So the option number two is that we will go deeper. So this one is at the bottom is in, and we're up from here. That we'll go deeper and we'll collect the 70 to 75 first before we go up and have bull market continuation. And option number three, some of you bears out there who believe the bull market is over, and of course we're just going to keep going lower, and we're not going to stop at 70,000. We're just going to keep going all the way down to possibly somewhere between 40 and 60,000 in this bear market. Okay, so those are your three options. I want to know below what you think, and I'd be interested to hear your thoughts. Why as well? Don't just say, hey, we're going lower, or the bull run is over, or the bottom is in and now we're going up. Those are the three options. I want to know why you think that. What are going to be the catalyst or reasons behind that? Some people put in the comments, it's over, see you in 4 years, but they don't really give any reasoning why or data. I'd love to hear your thoughts on that. So share that in the comments below, okay? And so, of course, be prepared for some volatility. You could have some move to the upside there. And this is the importance of learning how to make money on the down as well as the up. And we teach that in the Discord. I teach that in the Discord. Both Discords there below, that you can be a part of those Discords, because you can make money not just when the market goes up, but also when the market goes down and goes sideways. And if you know how to buy the dip down here at 80,000 or 76 and then sell up here at 82, you can certainly learn how to put an order in at 94, a short, and make money, and sell down here at 80 and make money. And you don't have to be a day trader or a scalper or a professional trader to do it. This trade took a full week to play out, okay? You could have opened the trade here on the 24th of February, and you could have actually closed the trade on the 10th of March and made quite a bit of money to the downside. And I teach how to do this safely and responsibly using leverage. You can even use 1x leverage. So it's like a spot buy on the way down, okay? Don't be all scared about it. Leverage trading doesn't have to be something that is dangerous or confusing or complicated. I break it down. I make it as simple as easy. We even have people in the Discord that are using $100 to make $1,000 per week. Okay, it is possible, maybe even more. There, we're going to have more and more stories coming out. We have a full leverage lounge in there when you can get supported. There's a community of people in there to help, to ask questions, who share their trades in there. Of course, I'm in there assisting and helping, and we do live trading, live sessions, live trainings every week. and you can interact, ask. I can push the button to unmute you, and you can ask me questions and talk to me during those trainings, okay? So don't be out there trading alone. If for the last 2 months you feel sad and your portfolio is down because the middle of January, the market has just gone down, you could be making money on the way down. And even if we do pump up from there are going to be pullbacks and corrections. You can learn how to make money on the way down as well as on the way up. And if the market goes sideways as well, you can trade these swings up and down. And many people in the Discords are doing that. A coin will move up, they'll take profit on it, and then they'll open up a short it goes down again, and they take profit on that as well. If you'd like to know more, check out the links below, the Discords there. And of course, until the next episode, or until I see you in the Discord, I hope to see you in the Discord there. Happy trading.